Hello traders, hello everyone, welcome to our new free video analysis. Actually, I didn't make any free video analysis this year yet, so that will be our first one. So I hope that you will have a very good year with a lot of pips. Actually what I want to cover is crude oil versus the S&P 500. Actually, I posted this chart on Twitter, so if you're not following me, make sure to look for the link below the YouTube video. Actually, as you know, I'm looking at the correlations between different markets, and the S&P 500 and crude oil normally has a very tight correlation. Of course, it's not always the case, so like now, for example, but what is very interesting is that we have some kind of a similarity, which based on the historical price action, obviously, which can help us to predict the future. Okay, so it's very interesting to see that crude oil, when it topped in 2019 on April, well, both markets, the S&P 500 before this top, were both in uptrend, and what happened is that actually crude oil fell or reversed very strongly to the downside. Okay, and the S&P 500, when crude oil was already declining, the S&P 500 was still trading around the highs. But then sooner or later the S&P 500 or stocks in general also turned to the downside. Okay, so actually this reversal on stocks happened 2 weeks later. Okay, this was in April of 2019. And then if you take a look here in summer of 2019, again here was a crude oil top. Okay, and then again the S&P 500, okay, which is in black, also made a top here, but again 2 weeks later. And then we can see here a drop which means that actually S&P 500 was trying to catch the bears that crude oil already showed 2 weeks earlier. And now again we have a very similar situation. As you know, I think that crude oil topped last week on January 7th. Okay, and now the S&P 500 is still trading to the upside. So if we respect what the crude oil is doing, and if we respect what has happened last year based on this approach, I would not be surprised to see also the S&P 500 turning to the downside. Okay, another thing that is very important is obviously a sharp drop on crude oil. If you're familiar with an Elliott wave theory, then you know that sharp drop typically means a trending change. And this sharp drop, either if it's a first drop from the highs or first bounce from the lows, normally represent just the first part of at least 3 waves of recovery. Okay, and if you take a look on this structure, you will actually be able to count 5 waves to the downside on a smaller degree time frame charts of crude oil. So meaning that this is probably wave A. Okay, so you would expect a bounce for a wave B, right? At the same time, obviously, crude S&P 500 can reach slightly higher prices or at least stay sideways, but then what I would expect is a drop into wave C on crude oil, maybe even some larger wave 3 decline, who knows. And at the same time, that's the timing when I would also expect the S&P 500 to catch the downside, if not already now, if this current wave A will maybe extend even lower on crude oil. So once again, because this has happened here in April of 2019, then in summer of 2019, I would not be surprised if we see something similar now. If we go and look at the charts of the wave count itself, what is going on crude oil? Well, as you know, I'm bearish. I'm expecting weakness. We are just moving now sideways after this breakdown. Okay, so definitely looking for more weakness here, but after wave B is completed. Now wave B looks like it's going to form a complex correction. I'm not sure if this is going to be a triangle here, where we are now moving to the lower side of this triangle range, which means this trend line can be retested. After all, this wave D, as I said, must be made by 3 waves. Okay, so this price action that I described earlier will fit into to be a wave D. There's also another possible wave interpretation, as long as we are above this trend line, that we will see here an ending diagonal for wave C. But again, even if it's a wave 4, and we will see maybe a push above $66 per barrel and then a drop from the 78.6 resistance later this year, you still need 3 legs to the downside into wave 4. So I think based on this approach, I really would not be surprised to see more weakness on crude oil. And if I consider at what levels the S&P 500 is currently trading and at which potential resistance, and with some very interesting structure as well there, I would really not be surprised to see limited upside on stocks. Now, with that in mind, if we go to the S&P 500, my first and primary wave count, I have been looking for this 5th wave, and looks like that there's still a lot of room available for this rise, but on the way up there will be always pullbacks, and I would not be surprised to see maybe this 4th wave pullback at the same time when crude oil is coming to the downside. And the reason why I think that crude oil may actually influence the S&P 500 as well is because on the 4-hour chart here I can count 5 waves up. Here's wave 1, wave 2, wave 3, wave 4, and now you have a wave 5 moving into some very interesting fib levels, including this Elliott wave channel resistance lines up there around 3300, okay, around there. So also I see a divergence here on the RSI, which means that actually upside could be kept here. But when it comes to trading, I know it's very tough here on S&P 500. I'm definitely not looking for any shorts at this stage, but if maybe suddenly we see a very sharp drop, then maybe I will try to look for a short after wave B bounce. Okay. On the other hand, even if I'm bullish here on this with this wave count, meaning that I'm looking for much more upside after a pullback, I would not buy in here. Okay, because I want definitely market to come to me to make maybe a 3-wave setback, and then we again may approach to bullish setups. Okay, so as it looks right now, S&P 500 may be moving into some very interesting resistance. I even have this alternate count of a flat formation moving into some nice fib resistance, and with crude oil already turning to the downside, I really would not be surprised. So the question is how to trade maybe the FX market with all of this. Well, if the 10-year US notes would move to the upside and maybe finally break out of the range, I still think the Japanese yen, even if it's declining right now, could be a very good buy. Okay, because then obviously yields would come down, which I expect to come down into a 5th wave, and that would make Japanese yen very strong. On the other hand, we could also focus in some risk-off environment. We should also look at some commodity currencies. I think that commodity currencies could actually maybe be driving to the downside. I mean, Aussie is a very good example. It has a very nice structure on the intraday charts for the last few days, and I would not be surprised to see more weakness. Not to mention also gold, which has a very strong impact on Aussie. It looks like those two are finally now, at least on the short terms, in some nice negative correlation. Positive correlation. So Aussie is definitely on my radar screen, and I would maybe even rather look at Aussie yen if maybe we see reversal to the downside on stocks at the same time when the yields would come down as well. Okay, if not, then maybe Aussie against the US dollar would be a better choice. Okay, because after all, lower gold, lower crude oil means strong US dollar, right? Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Please support me with a like, support me with maybe to subscribe to our YouTube channel to make sure that you will be notified when I will make a new next update. Also, I want to remind you that we have only 24 hours left for our special unique offer. You will get a yearly membership with a 30% off, plus free Elliott Wave School videos for which are 7 hours long. Okay, absolutely free if you subscribe to our yearly subscription, or if don't want yearly, we have 2 months for price of 1 deal available as well. So make sure to look for this link below, and if you have any questions, please let me know. Okay, traders, thank you very much for your attention and have a good day. Bye.